Welcome back to the 33rd episode of the Whiskey and Insurance Podcast. We have a nice bottle of whiskey here of West Bottoms, so we'll indulge in that and see what that tastes like. We also got a special guest that's very special to me, Ernest Campbell. He's been in the mortgage industry for a long time, so we're going to pick his brain and see his thoughts and you know the nuances of the industry and where we're about there. So we'll dive into that. Stay tuned and hope to hear your feedback.
Welcome back to the 33rd episode of Whiskey and Insurance.
Way to bring it up, bitch.
You like that?
Hey,
33rd.
Hey,
33rd.
Third that away. No more of that. No more. Please stop. Anyway, welcome back, gang. This is going to be a special episode, especially for me. We have, obviously, you guys can see we have a special guest here today, and I'll dive into that here in a little bit. But very special to me. He's been a pivotal person in my life, very influential and mentor, all of the above, you name it. He just so happens to be my brother. Also, he's been a successful businessman, a public speaker. He's been in the mortgage industry for over 20 plus years. And now he is currently with one of the biggest banks in the nation. And so he has a lot of insight, a lot of knowledge. And so we're going to dive into that. Without further ado, my brother, my mentor, Ernest Campbell.
Ooh, golly, we gotta give you a clap.
Wow.
Yeah, I like that.
I'm glad this is being recorded.
Because when you come back, you're gonna family.
Shane, remember all the stuff you said?
Yeah. Absolutely.
Now I have it video recorded. So,
Raw footage.
excited to be here, man.
And it's online now, so you can't take it down.
No, absolutely.
For sure.
Yeah, absolutely. Welcome to the podcast.
Yeah.
And so we're excited to have you. We're going to dig into some questions and things like that. But as you watch, he's a daily watcher. I mean, a weekly watcher. So he watches our stuff. So he knows what we're about to do.
So I hope you love whiskey.
This is the only reason that got me in the door. Whatever happens after that.
We love an
it's
honest
just a
man.
bonus. He said whiskey, and I said where.
I will say,
I like that.
this whiskey, first time I've ever had it was at Lazia's, which is an Italian restaurant in the Crossroads area. And it's a nice, if you want some nice, fine Italian, they come out, they got like this like cheese wheel where they like shred the big old cheese block.
Where they put the fire in it.
Oh, yeah.
And
they do that
fire.
for you.
Yeah.
And they'll like pull, what do you call that cheese where you pull it? Mozzarella.
Mozzarella.
They got a whole mozzarella thing for you. It's just in tomatoes, and they pick the tomatoes at a local place. It's all local food.
Pretty good.
And so I ordered an old fashioned, like I always do. I like to have an old fashioned or two. And they said, "Hey, do you want to try this new whiskey that we got from West Bottoms? It's a local whiskey." And I said, "Yeah, why not?" I actually like this whiskey a lot. Tastes really good. Scott, Papa Scott likes this whiskey a lot too.
Okay.
So I saw this as I was going through the store, and I was like, I don't think we've done this one. We got to get this one on the podcast.
Well, now that we know that Luke had tried the whiskey, he won't be giving us any guesses. Because he knows
That's
what it tastes like.
I don't know if he knows.
I don't know. I didn't look up the stuff.
I did.
Okay.
I just did because I can't drink it.
And
But
he's
you
not
had it
drinking
in a cocktail, so it was mixed.
That's right.
And
That's
I
true.
did have
That
it in a
does make a
cocktail.
difference.
I did.
That's true.
I had an old fashioned style.
Yeah.
So
But
I guess
let's
we like to
take a
compete.
minute.
Well, what's in the whiskey cup? We like to compete.
Let's take
so
a minute,
hopefully-
and I'm going to kind of expose you because this is the second time you've done this now.
Uh-oh.
The reason why we have this bottle is because Luke forgot to get the whiskey from his house again.
I did. I still have the two whiskeys sitting in the garage on the ledge. I went home and to go pick up the bottles and bring them to the office, and I drove all the way there. Got
Just
back
wanted
in.
to have another tour of route to your house.
I got back in the
Just
car.
wanted to see the house again.
Came back to the office, and I was like, "Oh shit."
Yeah.
I either turn around or just stop by at the store and grab two more. So we got two more.
Good.
Just wanted to keep those at home.
Yeah, exactly.
He was saving them.
Yeah.
You ready for this?
Let's do it. Ooh, that was nice. That was
Not bad,
nice.
not bad. All right, so I want you guys to think. What do you guys think is going to be in it already?
West Bottoms. That's a really good question, man.
That's hard, man. But looking at the bottle, who knows?
I like the color of it. It looks good. It's not light, but it's not dark either.
Thank you, sir.
But
Vanilla?
I'll tell you.
I'm going to start throwing stuff out.
vanilla.
Vanilla's in there?
Yeah, vanilla's definitely in there off the smell. But
I think there's ice in here. How about that? Anybody want to disagree with me?
No. You got that one. That one's right.
So there could be some honey in this too.
That's a good guess. Honey's a good guess.
You gonna tell me if I'm right or wrong or what?
Can I sit down real quick?
I mean, golly, you can't. I'm sitting here and I'm trying to figure this out.
Explain the bottle a little bit.
Let's do it then. Break it down.
The West Bottoms.
What are you smelling off the nose there?
You know, I think I do smell some like caramel.
Yeah. Okay.
Okay.
We'll see. I don't know.
Let me explain it, and then we'll get into that. All right?
Yeah.
Let's do it.
I'm usually drinking before I'm smelling.
Oh,
This is
Torture.
me down,
Huh?
yeah.
Yeah.
the West
I'm over
Bottoms was
shaking.
originally
Let me take a sip of this mug.
the West Bottoms was originally a manufacturing and transportation hub for the early industrial city of Kansas. In the spirit of the industrial revolution, West Bottoms Whiskey Company is constantly experimenting with new grains, distilling techniques, and blends to build an ever more perfect whiskey.
Okay.
Very
Okay.
eloquent. There.
Yeah. Yeah. So you want to go ahead and
Got a
tell
little
us if we're
Kansas in
right
there.
on some of these? We've got caramel, we've got honey, and we've got vanilla.
Caramel, hit me.
Yes,
Oh my
sir.
goodness. Can you hit
Uh-oh. Which one? Which
It's
one?
the top. That one. I'm pretty sure.
No.
No, that's wrong. There we go.
So that means I got that right?
Yeah, you
Yeah.
got that right.
So
man.
I'm 2 for 2.
Yeah. You are.
Ice and if you want to.
Yeah.
Oh, everything gonna be competitive.
Yeah,
Who
yeah,
said
let's do it.
Vanilla.
said-
I'm gonna give that to Mark because he said it first.
Yeah, yeah.
So if that's in
Let
there,
me see. Hold on, I gotta.
I
Find
get
it.
a pretty strong hint of it.
Yeah, it's in there for sure.
Yes.
Yes, sir. Give me that.
Yep.
Right here.
Yep.
Yep.
Give me
Did you not
that.
hear it on yours?
I hear it.
Okay.
I hear it.
I'm gonna pound Rod's.
Yeah, you don't
because
hear
I
it?
can't hear him still. So, Rod's, you're no longer getting paid production until this is fixed.
What else?
What we got?
Who said honey?
I did.
Somebody said honey.
Yes.
Was that
We
right?
got
Hit 'em
honey.
with it.
We
Hit
got
'em with
honey
it.
and caramel.
So we got it all right. We got
Yeah,
it
we're
right,
all
baby.
one
Let's do
for
it.
one, man.
Absolutely.
All right, there's
Should we do a little sip action and do a little cheers or what?
sure.
A little
do it.
whiskey for the soul and
Insurance for the wallet. Yeah,
Whiskey
let's
for
do
the souls.
Insurance
for the wallets.
Cheers, guys.
Come on, baby.
it. Yep.
Cheers.
Cheers to the water. Okay. Smooth.
Yeah.
That's really good.
Yeah.
They say.
Went down nice.
They say neat.
Yeah.
say.
Yeah.
Try to make it neat.
Wow.
Anything on the palate that we taste different?
Isn't any type of chocolate in here?
Nope. It's pretty.
Are there any nuts in this, like
Nope.
pine nuts or anything like
Nope.
that?
There's 2 fruit.
Stone fruit?
Stone fruit.
We got some cherries in this?
No.
No?
Not your average stone fruit.
Ooh,
Have we had it before?
Stone fruit.
No, we have not.
so
This
stone
is new.
fruit, think it's got a core in it. So cherries,
It's an apricot.
apricots.
This one, I honestly don't know if it's a stone fruit. I honestly can't think in my head if it has something in it.
All right, well, just go ahead and give it to us. Then,
Yep.
'cause
Pear.
No more guessing.
Yeah, it's got a core in
Does
it.
it have
Yeah,
a
it
core?
does.
Yeah, it's
Okay.
got a little. It's got a core in it.
Last one I don't think you'll ever get is honeysuckle.
No,
yeah,
we
no,
weren't
I
gonna
wouldn't
get
have
that.
gotten
I
that.
mean, how do you miss the honeysuckle?
You get honeysuckle?
I'm looking to stick out my honeysuckles. I'm a little disappointed in myself about that.
Yeah,
Price of the bottle?
$35.
That's not bad.
Yeah. It's not
Value of the
bad.
bottle,
It's a
not
very
bad.
It's a value whiskey.
Yeah.
for
94
sure.
proof,
Oh, wow.
47% alcohol. Can you do some
yeah.
math?
47, you said?
Yep.
94.
Nice.
Yeah.
said
Okay.
Oh,
Let's see if you can do math.
Yeah.
All right. We know what's in there.
Give the ratings.
Let's do it.
Mark, why don't you go first?
Yes. It went down smooth. I like it. It got a nice little story. Kansas. So, it's a part of where we
local.
are. Local.
Yeah.
So that adds a little value to the bottle for me. I would say, I'm going to give it a 7.5. 7.5.
You've been around the sevens the last
You know,
couple episodes.
Nothing's touching me like, which one I'm going to say.
Remus.
There you go.
But you had one above Remus.
You guys have been comparing everything to Remus.
Yeah.
That's what I said. I haven't.
That's like, now
Yeah.
you guys did the blue You did
Yeah.
the
Blue
black
label.
Johnny Walker.
Yeah,
You
right.
did the blue
We haven't
yet?
done blue
No, we've
yet.
not done blue.
So
We're
I
gonna
think
we're
that's
gonna do that.
That's what's gonna give
That's
the
what I
remix a
thought.
run for its
Yep.
money.
Yeah.
Yep.
Okay.
Because I've had Blue Label. Really
And
good.
we're gonna do Blanton's.
Lens
That'll
is
be
good.
coming up.
Beautiful bottle.
Yeah.
Yeah.
We have done Eagle Rare.
Eagle
Okay.
Rare's been up there. I like the
Angels Envy?
Yeah.
Angels Envy.
Yep.
See.
We
Okay.
and we did a representative. One of our guests brought on a bottle called the Representative. That was that was a nice bottle. I like.
That was a good one.
Yeah, so 7.5. Huh?
7.5.
You know, yeah, go for it.
Yeah, I was kind of in that range, right?
Really?
I didn't know we could give a half.
I didn't know we could give a
Look at
half.
7.25.
Okay, I like that. I like that.
We're going decibel. I didn't even do that far.
That's a mortgage guy for you.
Absolutely.
We got basis points coming in. Play, all right.
Eights and quarters.
Absolutely. All
I
right.
was sitting there and I was like, I was really hyped up for this one, and I thought it was going to taste pretty good.
Yeah.
And I don't know, I wasn't that impressed with it just on it.
think it's better in old fashioned.
I think it's better in an old fashioned. Not gonna lie.
I can see that.
I'm gonna go 6.8.
Oh.
But not bad. So like, it could be a 7. It's really close to 7 because of the value. I mean,
Yeah.
$35 bottle of whiskey, not that bad.
That's not bad at all.
And from a store,
Yeah.
where they mark it up, so you really probably get this thing cheaper online. But yeah, it's not that bad.
No, I like it, man. It went down smooth. So overall, we in the 7s.
Yep.
Yeah.
Okay.
Yeah, you can't
All right.
give your
That's
rating.
all
2
right.
weeks.
Yeah,
2 weeks.
2
and then
weeks.
I can.
Almost.
Yep.
Almost. All right.
You're drinking vicariously through it.
Exactly.
Imagine it through osmosis.
Yeah, I've been trying to tell him that, hey, you can take a little sip here.
I
now,
can't.
but
I
I
literally
do
can't.
dry January. It's really rough because obviously it's Chiefs playoff time.
Yeah,
right? And I'm always watching the Chiefs game.
Yeah.
And it's tough when I have host parties and the guys, they just like put shots in front of me for no reason. So I get it, man. 75 days though is
That's a
tough,
commitment.
man.
It has been hard. I mean, I'd be lying if I said it was easy.
I will say he looks really good. I mean, like on our last episode, he's lost a lot of weight.
Well, that's
Even
only one reason
kudos.
he's got his shirt unbuttoned.
Let's be real. Tal's been
show
known
it
to do
off.
that.
I do that every day.
Yeah.
Every day. That's my character.
I'm sure the ladies are tuning in.
Oh, man.
So let's
funny.
talk about before we go. Let's talk a little bit and then let's mix up our break.
Okay, because I was about to get there.
Oh, yeah.
I was about to get there because it's almost time.
Let's
Go ahead.
jump in because
Okay.
I'm really excited that you're coming on the podcast.
Yeah.
It's been a long time since I've been able to see you, talk with you, man.
Mm.
So one, I just think we can have maybe an extended one. We usually been keeping our podcast at 30 minutes, but I want to extend this one out.
You gonna
'cause
break
I
it
got-
loose?
I got a good question. I want to see what you've been up to, all this fun
Hurry
stuff.
up and get this.
We're always here to 4 seconds. Trust me. You can have a second.
Oh yeah, we got seconds.
So
to go.
I think what I'm learning is the reason you didn't bring that bottle from home
Uh-huh.
is that one's going to be empty.
Yeah.
So you said to yourself,
If we finish this bottle
first.
Oh yeah.
Mr. Ernest is coming today.
Yeah.
And I used to see his bar a lot.
Yeah, I
So-
did. Yeah.
All right.
Yeah.
Absolutely.
We, believe it or not, I don't know if you knew this, but Keith, Quan, and I, we used to sneak outside your.
Now, why you got to say that out the back?
Yeah,
Wait, come on, man.
But that window, just so you know, wasn't tied to the chime or to the.
It was not.
You know?
And it was the small little window.
I found out about
sure
it.
did.
Footprints were on the wall. So you guys didn't do a good job of covering your trails. And so one day I bring them down. I'm like, hey, what's that on the wall? And they're like, paint. And I'm like, no, that's a foot.
That's a foot
And I
right there.
said, let me see your shoes. We can't find them.
I don't know where the shoes are.
Yeah, right. So I did find out about that towards the end of us living there in that house.
Yeah.
So, and I'm sure you participated
Yeah, I did
in
participate.
some of that climbing in and out of the window.
I will say it may or may not have been my idea.
Yeah, exactly. Thank you. You might as well take it right now. Take it right now.
I want to know how you guys did the test run. So somebody had to be upstairs
Yeah.
to open it to see did the alarm chime because every door you opened said
Yeah.
beep,
Okay.
Yep.
beep. So somebody had to say it didn't beep.
It didn't beep.
They're going for it.
We're going.
Now what y'all have done is ruined it for my son because I definitely already knew that, and so in the new crib he can't open any doors or windows without it beeping. And
he's mad.
I'm gonna get an alert to my phone.
Yeah. Oh yeah.
During the podcast, I'll pull it up when it happens.
Oh yeah.
I said, hey, you have your uncles to blame for
Yeah.
it.
Oh man.
The exact time too, huh?
See,
As soon as that door opens.
I learned. I was kind of the similar way because I was the youngest of 4. So my brother Marq, my brother Jordan, my sister Kristen, all three of them ruined almost everything. I couldn't get by with diddly.
No.
So it was
Same.
like, if I was getting by with anything, it was at a friend's house.
Thanks. Sorry, Scott.
yeah.
Sorry, Scott.
Absolutely. Every time you come over, we're doing something we have no business doing. But that's okay.
Yeah, that was fun.
It was a good time.
I enjoyed it. I really did. But so let's talk into this. Like, I want to know, you're at a big bank. You've been there for a while, right?
13 years
13
in my current
years.
job, 23 years in the business.
Yeah. Wow.
Started at 21.
And with mortgages, there's been, if you look at the last 23 years, there's been tons of changes, ebbs and flows. We've seen the markets crash. We've seen the market, interest rates skyrocket. We've seen them in the lowest of lows, which we'll never get back to, in my opinion. I don't think we'll see low twos ever again.
No.
Tell me about that.
So, yeah, man, I got into business, crazy enough. Shanna and I bought her parents' home at 21 years old.
Oh, wow.
I actually stopped playing basketball in college and started working, and we had an opportunity to buy her parents' home, and I was still a junior or senior in college. I hadn't even graduated yet.
Yeah.
And no one in my family was a homeowner, so I kind of went through this from reading in books and going to class. I was a business major, but didn't know a lot about mortgage. And just going through that process, the guy that helped us with the loan, he was really a jerk off.
Yeah.
And the experience wasn't great. And I'm thinking, as a first time home buyer, this experience should be better.
Yeah.
Right? This is the biggest investment at the time that I was going to make in my life. I thought I should have walked away feeling good about the transaction, but I didn't. And it just led me to believe, like, I could do this.
Yeah.
I could do this. And I started looking at, I started going to job fairs, sales job fairs. And I'll never forget the guy who had me come and apply for the first job I had. He said, "How would you like to sell money?" And that was like an oxymoron, sell money. But it intrigued me. I was like, I've never heard it positioned that way. It's
true.
Right? And so I did a personality test there on the spot, and he called me in a couple of weeks. And I interned at Walmart in college. And when I graduated, they hired me full time. I think I was making $32,000 at the time, right? And you couldn't tell me nothing. $32,000, I was rich, in my opinion, at 21. And I sat down with the guy. I'm thinking about this job, and I'm excited about selling money. And he said, "Well, your salary is going to be $24,000." And I was like, "Oh man, there's no way I can go home and tell my wife I'm only going to make $24,000."
Yeah.
But as you guys know, he said, "Well, there's commission and bonuses."
Yeah.
And I said, "Well, I can't go home and tell my wife I'm making $32,000 and I'm gonna make $24,000." He said, "No." He said, if you don't make $32,000 in your first year, I'm gonna fire you anyway." And I was like, "Ouch."
Yeah.
So at that time, I put on my sales hat and I said, "Oh, so let's just agree to this. If you give me a goal within 90 days, if I hit that goal, you make up the $8,000, so that I know no matter what, I'm gonna make $32,000."
Yeah.
So he put a number in front of me. I can't remember what the number was, but I produced it in the first 90 days and got that check. Once I got one check for $8,000, of course it was about $4,000 after taxes.
Oh yeah.
I never wanted to go back. Not only was I being rewarded for helping people achieve the dream of home ownership, but I was making a good living.
Yeah.
And so
That's awesome.
23 years later, I'm still here in the business, man.
Yeah, that's awesome.
That's
man.
awesome.
That really is. I sit there and I think, like, you've had to have seen some tough years. You've had to see, like, I bet before the last 18 months, from like 2017 to 2000, or let's go 2018 to about 21 or 22, really, it had to have been just glorious.
Oh yeah.
Because interest rates were high twos, low twos.
Best time of my life, but the busiest time of my life as well.
Yeah.
You're right. In 23 years, I've seen highs and lows, right? The one constant in this business is change. And so when I first started out, I started out not only doing mortgages, but doing personal loans and home equity loans. And then the mortgage crisis happened in 2008.
Yeah.
And I lost my job, which happened to a lot of people. Right?
Yeah.
And I was making a decision, do I want to get back into business? Because banks were being blamed for everything.
Yeah.
Right.
And I never tried to harm anyone. That's not the reason I got into business. The reason I got into business was to create a great experience for the people that I was helping. And so after about 1.5 years out of the business, I got a call, and the guy said, "Hey man, there's a opening like I know where you live. It's nearly, you could probably throw a rock there. And that's what got me back into the business in 2011. So from 9 to 11, I got out, which a lot of my friends did.
What'd you do in 9 to 11?
So that's when we opened the salon.
Yeah,
I became an entrepreneur, man, which was has really helped me in my second career path when I got back into the business working for a large bank. And I got back in just originating. When I left, I was leading the team. And I said, man, I just don't want to worry about leading the team. I just want to focus on me. Plus, all the folks that I had knew in the business were out of the business because they all, Dodd-Frank happened. You had to get licensed. You had to have background checks, financial fitness. I don't think a lot of people know that. Maybe it's simpler in insurance, but you get an FBI fingerprint. So they make sure you got to try pretty hard to harm customers in the mortgage business now. For sure. But prior to, it was the Wild West. People were doing loans on bank statements. They were doing stated income. They were doing 60%, 70% debt to income ratio, like putting people in situations that they weren't going to be able to sustain. Right?
One of my favorite movies, well, it's a sad movie, but favorite movie, The Big Short. I mean, you get to see half that stuff that was going on.
For sure. So imagine me being, at this time, I'm 27, 28, and everybody knows I'm in the mortgage business because I wanted everybody to know, right? Because that's how I was making money, right? I wanted to promote myself. Yeah. But then after the mortgage crisis, now everybody knows I'm in the mortgage business. You know what? Like, my mom lost her house. Like, I don't even know your mom. Right? But that's the kind of stuff I was dealing with. I mean, I was, during the time while I was off, while I wasn't working, I still was getting phone calls, text messages from everyone about their mortgage situation. So that was the disguise in that blessing, is that I was able to help people. I mean, I had severance, so that helped, right? But I was able to help a lot of people during that time who were going through, a tough transition. Mortgages were adjusting. A lot of people had adjustable rate mortgages. Their adjustable rate mortgages aren't bad as long as you know what the downstream implications are and you are prepared for that adjustment to happen, right? And so a lot of folks' mortgages were doubling. A lot of people had what they called pick-a-pay loans. These were loans where you weren't paying any principal, you were only paying interest. Well, in a rising equity position, that's fine, right? When values are going up, it's okay because your value is still going up even though your balance isn't decreasing. But when the real estate market crashed, and not only were you not paying principal, but your property value was decreasing, you got into a negative equity situation, which a lot of people haven't recovered from. So, I say all that to say I got the itch to get back into business, but only for myself. I just started originating my own book of business. Started from the scratch, man. I applied for a manager job.
Was this with, or who did you go with in this time, on the second time?
This is with the big bank.
Okay.
Yeah, so I'll just say it's one of the 4 big banks. Okay. Everybody should know who the 4 big banks are. But I just started originating for myself. I think the first year I helped 50 families.
Got it.
And that was pretty good for starting in March and not having any contact, starting from square one. I was telling Marq, one of the things that I did was join the Lee Summit Chamber, which I know you guys are members of, and then I joined their Leadership Lee Summit class. I recommend you guys both check into that. What it did was it got me involved in the community, and I got to meet a lot of folks that I wouldn't have otherwise met in a structured environment. And so for me, here's where I had the news flash. I had my best friend. He got married and bought a house, and I got the invitation to his housewarming, right? Now, you may say, that's cool. Congratulations. Your best friend bought a house. The best man in your wedding bought a house. I'm like, yeah. But somebody else did his mortgage because I had got out of the business, and he didn't know I was back. So I got that invitation, and I called him, and he was like, yeah, man, I got the new house. Did you get? And I was like, yeah. Who did your mortgage?
Forget everything
else. The realtor sent me some guy, and I was like, why didn't you call me? He said, dude, I didn't know you were back in the business. That was the punch in my chest, right? Yeah. Should I blame him or should I blame me? It was my fault. I didn't do a good job of letting my circle of influence know, right? So I'm a big believer, like you hear in sales waiting list. Damn it, if I would have just sent an email or a flyer or a postcard to my waiting list, that was like a $300,000 mortgage I could have helped with, right? So I did that for a while. I think the next year I closed maybe another 100 loans, and then I just got the management itch because people were always gravitating to me for help. And I'm thinking, if I'm going to continue to lead a team, I might as well get rewarded for it.
Yeah.
You know, and so I grew a team here in Kansas City, and since then, man, I've had the opportunity to move to Houston, and I ran that market, and now I'm in Philadelphia, and I manage 5 states, Pennsylvania, Delaware, Maryland, D.C., and Virginia. And so about 100 loan officers.
Is your goal to continue to go like to New York or what's
You
the
know,
goal there?
I said that I had to get to the East Coast. When you're in finance, if you don't go to the East Coast, you haven't really been in finance.
Correct.
Right?
Okay.
And so to your point, in that window, I moved in 18. Best time I could have made that move, right? And then, you know, the pandemic happened, of course, but from 20 to 22, I think in 20, my team originated $2 billion. In 21, we originated $3 billion, and in 22, we originated $4.1 billion in loans. So
That's insane.
I almost had survivor's remorse because think about during the pandemic how many people were out of work and couldn't work, and here I am
tons.
like busy like crazy.
Yeah.
For sure.
You know, and it was like, I don't think people understand that where this crossover happened, because you have these folks who are working from home, so they have time. That's the biggest thing with a mortgage transaction. You got to think about it. You are still working every day. You got to take care of the kid, and here I am calling you saying, I need your pay stubs, I need your tax returns, and the delay of getting stuff. But now everyone's home. And now when you're in sales, right, you're normally calling folks, and what are you getting? Left message, left message, right? But during the pandemic,
Everybody
I know you're
answer.
home.
Yeah,
Yeah,
exactly.
pick up the phone.
You're not anywhere else.
So I'm telling my team, like, listen, everybody's home.
Yeah.
Right? So you don't have that excuse anymore.
For sure.
Yeah.
Call them up. And yeah, it was a refi boom. You know, I never thought I would see 2.25 on a mortgage note, but I saw some of those.
Yeah.
Right? And you're right, we won't see that again. I can remember my first loan that I wrote in 2001 was at 9.99%, and the family was happy to get it.
Yeah.
Right. And when I worked my first 7%, I was like, oh my God.
Yeah.
This is where I'm now. She's selling money. This
Yeah.
is fun.
Mhm. Oh, yeah.
7%, and then to go from 4s to 5s to down to 2s. And
I
now
wish-
today it's probably 6.875, 7%.
I really wish I would have capitalized on the twos way more. Like looking back at it, I
Second
would.
home, I should have bought it.
Yes, I know. I just.
Let's not bring that up.
I'm the same way.
spot.
I'm the same way. I'm thinking South Florida. Like, why? Why did I not do that? But you know, I should have mortgaged everything.
Yeah.
Why
It would've
not?
pr- it would've pr-
Cheap
it would've
money
ma-
is what they say,
Yeah,
right?
I mean, when you can get money for 2%, you're essentially it's like if you've got a loan for 2%, don't pay it off. Just keep paying what you got to do. Just they
Deduct
gave
the
you free
interest
money.
as much as you can.
Yeah, I mean, it's just no reason to pay off a 2% mortgage.
I was
There's just
still in college.
No reason. And I got my house was my house before the one that I'm in currently because I moved this year in January, which there's no way that I could have gotten anything less.
Yeah.
My previous home was 275.
Yep. I think this was on my home now, 275.
Yeah, I wish I could have kept that one or done
you
something
did.
like that, but. You know, sometimes whenever you want bigger or better, you gotta have cash. So that house gotta have cash in it. I bought it in 19. I couldn't have timed it any better.
Yeah.
On the previous one. So
You got
yeah.
lucky.
Seriously.
This
But,
is-
yeah, go for it, Mark.
Go ahead. No,
you're good. You're
this
good.
is a good segue for us to
Yes.
pause.
Oh, yeah.
Right.
Mark's gonna hop in.
run in here.
I'll come in here and we'll have that. But we're gonna dive into a little bit more about what Ernest was talking about in regards to what do you see in the foreseeable future for the mortgage industry?
That's a
right?
good break. Thanks,
What is
Mark, for
that?
coming in on
Yeah, absolutely.
Yeah.
And what does that look like for everyone else that's involved? So we'll be right back. We want to shout out our sponsor, Apollo Insurance Group. They are one of the largest health insurance brokerages out of the Midwest. They specialize in health, life, dental, vision, a lot of the things you need in regards to insurance they have. So they typically save their clients a lot of money in regards to their premium. So if you don't have someone that's helping you or aiding you through this process or this chaotic world of health insurance, please reach out to them. They fight for you, they specialize in what they do, and they're great at their job. Welcome back again to the 33rd episode.
Let's just go with the Trey.
Yes, sir. Again, we're
Thank
here
you,
with a
Paula.
special guest,
Yes.
Ernest Campbell. Before the break, we got into a little bit of the mortgage industry, his background and things of that nature, which is, fantastic. I've kind of been playing the field because, I know the man. I've seen it from my own two eyes. And so now I would like for us to really dive into where the market is right now in regards to mortgages? What do you see the future of the mortgage industry, all the pandemonium that's going on right now with rates? Where do you see that? Do you see that settling anytime soon? You know, who is impacted? Why? Take me down that tunnel.
Yeah. So listen, if I had a crystal ball in this business, I'd be a lot more financially secure than I am today. But you know, they say history teaches you the future. There's an anticipation that third quarter, the Mortgage Bankers Association anticipates that either third quarter or fourth quarter, we'll see at least 2 to 3 rate decreases this year.
Okay.
That's
And
really
so
good.
everyone's looking forward to that, right? Because we've been writing loans from anywhere to 8% to 6% for the last 2 or 3 years. And so if we can get down into the low 6s and 5s, there's an opportunity to refinance. You may hear people talk about the terminology of marry the home and date the rate. What that basically means is don't sit on the fence and not buy. I mean, you still want to make sure that you are buying a home that you can sustain. I'm not just about creating homeowners. I'm about creating sustainable homeowners. But as I was telling you guys, I think we were maybe off camera, that after Dodd-Frank, you got to try pretty hard to put a family in a situation where they can't afford the home.
For sure.
Unless they are doing something to not disclose their accurate income and stuff like. And there are even things we do behind the scenes that a lot of people don't realize. People try to give you pay stubs that don't really match their income. We do verifications of employment. We do a verification of employment the day before you close, just to make sure you didn't lose your job and didn't disclose it to us. Believe it or not, that's happened to me before. And so I would say that first-time home buyers are where the market is going to grow, because someone who's already in a home, like myself, I'm not selling my home unless I have to move. I'm not getting out of my 2.75. Now, what that does do is it creates an inventory shortage because you don't have people moving.
Correct.
Right? But what you do have is you have the boomers, right? The largest, before, I believe, the Gen Zers, largest population of folks, they're starting to downsize or they're starting to die, right? So that's going to open up some inventory. And then new construction. New construction is where probably 35 to 40% of the market is coming from, because that's what's creating inventory.
Okay.
So for folks that are looking to build a home or work with a builder to build a home, they're creating that inventory. Of course, you're going to pay a premium for that, right? But yeah, so first-time home buyers. And then from a diverse segments perspective, home ownership growth is going to come from minorities because they have the lower home ownership rates. And so that's really where I'm talking to my team about of fishing in a different pond. You got to have new construction. You got to go out and be talking to builders, and you got to go after first-time home buyers. And that hasn't always been sexy because thinking about, I told you guys my story at 21, I bought my first house. It was $60,000, right? Well, that's why the guy who did my loan wasn't excited about it. It was a $60,000 loan. He probably was looking for a $200,000 or $300,000 loan.
Right.
And now knowing he may have made a small commission on that loan, he probably charged me a bunch of points, and I didn't know it. But now first-time home buyers are spending $300,000, $400,000, or $500,000, right? So it's not the same as it was, and I'm not going to age myself, but back then. So I think that that's where the opportunity is going to come from in the market. People see a 6 or 7% handle, and they're like, man, I know it was just 2 and 3, 4%. But historically, as I said to you guys, my first loan was 9.99. The first loan I did personally on my own home was 7.65. So historically, rates are still low. And if you talk to your parents and your grandparents, they will tell you, they probably bought a mortgage at 16, 17%. So I get it. Coming from a 2 or 3, it's hard to swallow. But you just have to look at what are you paying for rent, and can being a homeowner make more sense to you?
For sure.
And there's all opportunities out there for you. The biggest obstacle that people face is probably the down payment.
Yeah.
But now you can get homes for as little as 3% down. And there's a lot of grant money out there. There's a lot. You can get gifts. I can get into a lot of that. But what I don't want people to do is not pursue home ownership because they see rates at 7%.
Right.
People don't buy rates; they buy payment.
Yeah.
Right? You guys know that. So you got to figure out what payment works best for them.
I got a question. So a lot of our agents watch this, and they're all young like us. For first-time home buyers, is there any insight that you can give to like myself, like in the next 2 years, or anything to look out for, or anything to kind of note?
For sure. If I was your age and I was a first-time home buyer, I would buy a multifamily house.
Okay.
Right now.
Yep.
The GSEs, Fannie and Freddie, now allow you to do 5% down for multifamily. That didn't used to be the case.
Okay.
And you can also count the income of those other units if you can use them as rental property. And what I don't understand is a lot of times you guys, young people, will be roommates in an apartment, but why not be roommates in a house?
Exactly.
Right?
House hacking.
For sure. Because, even if you were dating someone and the trail of marriage was coming, why don't you both buy 2 4-unit properties as each of them being your primary residence, and then once you get married, you guys can rent those out and then jointly buy a property.
Smart.
Rates are different for your primary residence versus an investment property versus a second home.
Okay.
So while you are without a primary residence, purchase as much as you can afford, right?
Yeah.
And here's the other thing. Don't be afraid to buy a starter home.
Okay.
Like, I know that, Luke's got on these Gucci shoes, which, by the way, I love those. I love the saddles.
I will say, that's not a lot of people will say.
They're Gucci.
No.
Oh, yeah, they're Gucci.
Stitch socks, too, right?
Yeah.
Marquand didn't get all the fashion sense by himself, okay? We'll talk about that on a later episode. That's funny. But sometimes we have Gucci taste, and so we don't want to buy,
got Walmart
the Allen
money.
Edmonds house.
Yeah.
Start.
Right.
Yeah.
Right. Don't allow you waiting to get this mini mansion because here's my journey. I bought that $55,000 home. Then we moved into the house in Lee Summit, right?
Yeah.
I stayed in the house for 13 years. I sold that house. I made a couple $100,000 off that house, right? I would have never done that if I had not just pulled the trigger and bought, right? But the money I put down on that house was from the other house, right?
Yeah.
So don't be afraid to start. It may be a $115,000 house, but if that's what you can afford and it's available, first of all, if you find one in this market, jump on it.
Right.
But put work into the house, right? You talked
Right.
about us finishing the basement. The basement wasn't finished when we bought that house.
Really?
Right? So we ended up doing that, which added value and
Right.
over time. I think sometimes your generation wants
For sure.
the Gucci house.
Absolutely.
Yeah.
And
Absolutely.
so you're waiting and waiting and waiting. Well, guess what's happening while you're waiting?
It's going
Prices
up.
are going on and up.
Yep.
Right. And so while you think that you're
the
benefiting
right
by
thing.
waiting, you're only going to spend more money by waiting.
sure.
So
Yeah,
I would say if you can get into multifamily, do it. If you got a partner or a roommate, you guys go into it together. Make sure you have a clear understanding, something written about what
sure.
happens should you fall out, right?
Yep.
But that would be my suggestion.
That's nice.
That's good.
I like that.
Because I mean, like, even when I sit here and I think of the house that I bought,
Yeah.
and I was, it was what I knew I was going to have a family soon. I knew I was going to be having kids, all this stuff. I got my starter home, and I bought it in 2019. And from 2019 to me selling it in 2023, late in December, let's see, 4 years I owned the home. It's the longest place I've ever lived in a home. You know my family. We move all over the place. Which, by the way, we got to do something about that because we're not, we got to be able to have a mortgage guy to tie into. I mean,
There you go. The whiskey and the opportunity for mortgages.
yeah.
That's why I came.
So, one, let's do something about that, and then two, I just know on my personal home, and I don't know if houses will go up as much as that it has, but I think I had like $250,000 of equity in just owning a home for 4 years.
4 years, yeah.
Now I went in, I redid it.
You did a lot.
Yeah, I did a ton of stuff
You
in
did
the
a lot.
house.
You did a
and
lot.
I always recommend telling people, I mean, if you can, pay for that stuff in cash because when you go to sell that home, I literally had $200,000+ in equity. Now, if I were to subtract my actual cost that I
of
put into it,
repairs.
still 6 figures and
Yeah.
well into my 6 figures, but I mean, it's so worth it, totally worth it. Allowed me to get into the next home.
And think if you would have been renting for those 48 months.
Yeah,
right?
I bought that
Well,
house
let's
before I
just-
was married.
There you go.
So-
if you were putting $2,000 a month, you'd have $96,000 that went down the drain. You have
Yeah.
nothing to show for it.
Yeah.
And so I think that's the other part that I try to explain to folks is the dynamic of you're paying someone else's rent
Yep.
versus you paying down your equity. And but then you get that I don't want to cut grass. What about the hot water tank? I don't want to have to fix stuff. Yeah, but don't you like blasting your music?
Yeah.
You like the Usher.
You gotta find out.
You like the Usher.
Yeah, let's go now.
You gotta find
now.
absolutely some trade-offs.
Right.
That's super funny because it totally is. I just replaced my basement sliding door. That was $2,500. I'm having to rip out my entire landscape front and back. There's a walkway path that was totally uneven. I mean, it's just a constant thing, and I still have a long list of stuff that I haven't gotten to. But
Well,
that's
get a home
homeownership.
warranty first of all.
Yep.
Some people do it when they buy, but they never renew it. Especially if you're getting an older home, because there's always going to be something. My microwave just went out, the GE microwave. They came out. I paid my $50 deductible. It was like
Who do you use? Old Republic? Who's
I
your
don't
go?
know if it's Old Republic. I think it's AHS.
Okay.
Yeah. You guys sell home warranties too?
No,
Trying to expand the business?
I wish. No, I tried
Let
to
me
get
know.
find a
I'd
cheaper
like to
one.
be a partner.
I tried to get a home warranty, and I've always used Old Republic. I've always had a home warranty. I can't get one on my current house because they wouldn't sell it to me because it was over 5,200 square feet.
Oh.
And I don't know if that's a Missouri rule or if there's some type of
I
thing.
like how you threw
You
in.
threw
That
the
was
PCA
okay.
square footage in there.
That was nice.
That was a light flex. That was a light flex.
Yeah.
But it's frustrating though because
I know, right? I mean, it's frustrating.
It's a big house. It sucks when you have a massive house.
to fucking clean. I know that.
It just sucks when there's 3 different floors and 5,200 square feet.
I get it, man.
Oh man.
No, their number is 5,200, so it's not 5,200.
Yeah, 7,000 square feet.
Yeah, correct him. Correct.
But still, like it was frustrating to me because I couldn't get any of that stuff. They would say, "Oh, well, we can't do anything. You need to contact your realtor, and your realtor needs to write some type of thing." And I've never done it.
Yeah.
So it's been.
That sliding door may have been covered under that.
It
but-
probably was.
Yeah.
You know, it would have cost me $100.
Yep.
probably.
And
I'm
that
paying,
sucks.
$115 a month. But something breaks, I'm like, whew, just calling the home warranty people.
It's like health insurance.
Guys, we are getting a wealth of knowledge, and we're gonna keep getting it. I want to change the scenery a little bit and put the lenses
Hot seat or
on put the lenses on agents, right?
Okay.
In the mortgage industry. Is that what you guys call them? Agents?
LOs.
Licensed
Consultants,
only.
mortgage
Okay.
consultants,
Okay.
loan officers.
Okay, gotcha.
I was like, what did you say?
Well, we see in insurance we got LOAs,
We
which
do.
is licensed only
Correct.
agents.
Correct.
So I'm
Absolutely.
sitting there like, all right, what's an LO?
Absolutely. And so I really want to know from the perspective of, their perspective in this market that we're in right now, right, with the rates where they are, and we don't have a globe to know where they're going to be.
Yeah.
How are you giving them knowledge or tutelage to attack this market? What are you saying to make them understand that, hey, at the end of the day, we still have to figure out how to
Still got
how to
goals, right?
manage.
Yeah,
Yep.
we're not a nonprofit,
Yep.
and I say that all the time, right? So while I do enjoy helping people, I'm never shy to say that we do this to take care of our families. Everybody has goals that they have to meet, and I have goals that I have to meet for the 5 states that I manage. And so, great question from that 19 to 22 window where loans were falling from the sky. All you had to do was call Luke and say, Luke, you're at 6%. I'm going to get you at 2.75. Luke said, where do I sign?
Yeah.
Right? So now there's no more refinance business, right? At the time during that span, 70% of my business was refinance business because we were just taking people from higher rates to lower rates and doing some purchase, right? We do a lot of purchase, don't get me wrong.
And loan officers, they get paid, just so I'm going to make the things clear, whether you're doing a refi or a new purchase, they get paid the same, correct?
They do.
Oh,
they
okay.
do
That was my
unless
question, actually.
unless it's your current servicer.
Okay.
So if your mortgage is with a certain bank now and you redo that mortgage, your commission is adjusted because the company has been incubating
new
that
loan.
customer. It's not new business. Right?
Yeah.
It's kind
So
of like
if
an
you do a
AR.
purchase, that's a new loan. You'd make more commission on
makes sense.
that loan.
Got it.
But you were doing so many refis, you couldn't turn it away.
Yeah.
Right. So coming off of that record-setting year, right, $4.1 billion. There's some companies that didn't do $4.1 billion in originations, and there are 15 of me in my role, right?
All right, big dog.
So,
Come on now. I like that.
You gotta throw it back.
you caught
Yeah, you like that? 15. They're 15 of me. All right. So Big Four bank. So just based on the
I'm kind of a big deal.
But anyway, what about that watch on your wrist? Slight flex.
It's a little, well, I see the man over here with his Rolex on. I didn't wear my Rolex today, but I do have on a Breitling today.
Slight foot. I didn't wear my Rolex. Slight foot, but I got a Rolex.
Come on now. I like to switch it up every now and then.
Yeah.
It matches my suit.
Got the Mercedes back home or what?
I actually do.
Yeah.
But let's stay on topic here. Let's stay on topic here. I work hard.
Work hard, play hard.
That's really true. You knocked me off my balance. Okay.
Yeah.
What was the question you asked me?
Whiskey and insurance, baby.
Yeah. That
All right. Let's bring it back.
Let's bring it back.
All right. Now, what was the question again? You asked me something about. I was talking about
your role.
Marq asked me about
Yes.
my sales team.
Yeah.
Because at the end of the day, we're in a sales job.
Correct.
Right. So loans are falling from the sky. Some of my team that I hired during that time, they don't know how to source new business, and it frustrates me. And so I tell my managers that work for me that I expect you to be the best salesperson on your team. And some of them look at me with glossy eyes, and I'm like, no, like if they can't come to you for sales coaching, if you can't do joint sales calls with them, if you can't go out and find realtors and find builders, then how do you expect them to do it? Right. So now it's about the volume of activity. You cannot base your success today on your production alone in a market like this, because if you do, you're going to be mentally washed. If you were accustomed to, just for example, some of my best people, my top guy did $247 million worth of loans in 1 year, right? Now, right now in this market, he might do $60 million.
Yep.
So if he's basing his success off of that 247 in his mind, that's an anomaly. Like in our business and in your business too, when you have great months, put money away, right? I was always taught that you don't want to be on this roller coaster where you have a great month. Some people are good at originating. Some people are good at working a pipeline. You got to do both. If there's no constant originating and working a pipeline, then you're going to have a great commission month. You're going to have a down month. You have a great commission month. You got to be consistent, right?
Yep.
People don't fail. Systems fail. What is your system, right? Is it Monday, I'm doing all of my follow-up calls. In Tuesday, I'm going out to meet all my real estate agents. On Wednesday, I'm calling 20 people out of my book of business just to see how they're doing. On Thursday, I'm going to open houses. On Friday, I'm wrapping up and calling all my customers who are out looking to let them know I'm available this weekend. But you can't just wing it. Right. So to Marquand's point, what I'm asking the team, you got to be involved in social media. I know everybody says that, but for mortgage guys, they haven't really been accustomed to having to do that because their loans were falling from the sky. But you got to now be 10 places at once. How do you position yourself at 10 different places so that you are always an avenue for someone to call? Right. So your circle of influence, your book of business, what networking events are you a part of? Where did you go this week? Get out of the damn house. Right? I stopped doing the Zooms I'm like, hey guys, we're meeting face to face, right? Had it not been for me having to come here for a family emergency, we were having a face to face meeting once a quarter. I get my whole team together, and some of them are in Virginia Beach, but they got to travel. Okay. Because we need to get face to face. I need to look you in the whites of your eyes, and that's, I think, the key for people that are in sales. Number one, have a system. Number two, have different ways that you connect with consumers. It can't just be one way. What you guys are doing here with the podcast is another way for you guys to not only connect with consumers, but connect with potential insurance agents. And so you can't just sit behind your desk any longer. You got to be out and about. It never fails. When I go out with one of my guys and we go to an event, they always walk away with someone calling them the next day, hey, I got a potential lead from you. And I say to them, what would have happened if you just stayed in the house today? Would you have gotten that deal? No, I wouldn't have. Yeah, but I got to lead you there. And so that's when your leadership is tested in moments like now. I don't care. It's funny, my boss, when I send him an offer for someone, if I have their production from 21 and 22 attached in the offer, he said, I don't want to see that. Because that's funny money. That's monopoly money. I want to know what they do in 23. I want to know what they've done year to date in this market. What they did in 21 and 22, while it may be great,
it's not today.
It's not.
What have you done for me now?
What have you done lately? For sure. Because for those folks who only entered the business to do refinance business, now you're talking a 90%
nobody had to
purchase
sell.
market.
Nobody had to sell.
They didn't have to sell.
Nobody had to sell. It was literally like picking $100 bills off a Christmas tree. And we've had markets like that in insurance.
Absolutely.
And the reality is, what you said is, what have you done for me lately, or what have you done for me now? That's the reality of any business. That's natural. Like, expect that. I don't, 3 years ago, whoever our top agent was, which I don't even know, it could have been Jeff, it could have been Coop,
I don't remember.
It could have been several. But it's like, what is that person doing now?
Yeah, correct.
And what are they doing now to grow their business, grow their income? How do they grow forward? Business, I tell people all the time, it's how I'm a natural leader. My natural leadership, I was just doing a leadership training today. My natural leadership is glass half full. Glass half full.
It sure is.
And Jared, who's I
I was about to say that.
Jared, who does a bunch of stuff, director of sales, all kinds of stuff. He's glass half full. I'm glass half empty.
Yep.
And I think that makes a lot of difference, because my thing, when I look at a sales production report, like yesterday, April 30th, we put up 143 policies as a company. Best day in a long time. Best day.
I think it was the best month we've had in a long time.
Best month that we've had in a long time. Where's my mind? Does my mind immediately go to celebrating it?
Nope.
No.
How can we get more?
My mind was, where did we go wrong? How many did we miss? Why did we do this? How come we only sold so many of this carrier?
Correct.
How can we perform better?
Yeah.
Jared's like, oh no, let's celebrate, baby. And there's time and a place for both.
Yeah, it
I
is.
understand that from a leadership perspective, that's one of my weaknesses, and I've got to be able to challenge myself in being able to be more glass half full, not glass half empty.
What are your areas of opportunity?
Correct. But then on the flip side, Jared has to work harder on being more glass half empty on, all right, where did we go wrong
Exactly.
last month?
Yeah.
And how and so in a leadership, when you're talking about loan originations and you're looking at 21 and 22, who gives a rip?
Yeah.
What'd you do in 23?
First of all, they've all spent the money anyway. So
exactly.
Yeah.
that's over with. Right?
Nobody cares. How are you growing business today? How are you growing as an individual in the loan origination business?
Yeah. If you're not, you got to get. This is a saying I say to them. You got to get comfortable with being uncomfortable.
Yeah.
Right. And so you can't continue to do the same things you did in that market, in this market. You just won't be successful. I think, and that's probably the case for a lot of people. Right. Now, what we did realize is, can you be successful without coming to an office every day and sitting there? You can, right? But do you have the discipline to do it on your own, right? And if you don't, then who's your accountability partner? And if you don't have an accountability partner, then I'm going to be your accountability partner, right? Because I have a goal that I have to.
He
do,
loves this.
right?
He loves this shit.
So
He's eating this shit up.
you're not.
it's like he's mimicking. I did not give him any of these answers. I'm telling you right now. All right.
So I love what you mentioned around glass half full piece and glass half empty. I have to stop to celebrate the small wins.
Yep.
You have to reward the behavior you want to continue, right? And when you don't, Luke, you miss out on the window of opportunity, because if you beat your team up too bad, right, then they're not motivated. So it's a fine balance. Some of the things that I do is once a quarter we recognize the entire team. We have a state of the market call with my entire team. It's on Zoom. We usually have a theme where bring your dog, or wear a funny hat, or bring your favorite sports team. Everybody's on camera. We highlight the top 10 in like 20 or 30 categories. It's all sales focused. We try to have a little bit of compliance, because you got to have compliance. But it's my time to recognize my team and make it all about them, because I am always pushing. But no one can say that they're not recognized for their work.
So on Zoom, I'm curious, because your guys' organization, being a Big Four bank, you've had to learn how to operate independently and at home. You just had to. You probably guys didn't even step foot in an office until like the last
2.5 years.
Yeah, I
2.5
mean,
years. I had a building I was paying a lease on of $12,000 a month that was empty for 19 months.
yeah. That would just make me sick to my stomach.
Luckily, it wasn't my money, but it was on my P&L. So it still
it still impacts
you.
you. Impacts a bonus at the end of the day. So, how do you? I've always been curious on this, because I think we've struggled with this as an organization. But how do you motivate sales agents to be more connected? I mean, I hear what you said on like bringing your dog, doing different things like that, doing your favorite sports team. But how do you really motivate them to want to do what they need to do? Especially now, it may be a little bit different scenario. Like those people that you may be dealing with may have a W-2 part of their salary, so that they're obligated. But let's talk about like fully 1099 folks.
Yeah.
How would you motivate a sales agent?
So my team is 100% commission. They draw.
Okay.
And whatever they produce goes against their draw. Now, they can be in a negative deficit, but they have a standard of, let's just call it 3 loans a month. You need to be closing 3 loans a month, or you need to be closing a certain dollar amount. And if you're not, then you're not meeting our minimum performance standards. And within 90 days, we're starting to have corrective action conversations, right? So that part is the accountability, right? I think for me, I just measure everything. I'm a data junkie.
Yeah.
Now, men lie, women lie, numbers don't. So I'm going to look at the numbers. Now, there's still a piece where this is where I talked about, I could look at the numbers, but I also asked my manager, have you been out on a sales call with this individual? Because if they're doing all the right activities and they're not bringing success, then something's wrong with their approach. Right. Something's wrong with their sales skills.
For sure.
Right? Is it a skill or a will issue?
Yep.
Yeah.
Skill issue I can help you with. A will issue, I don't have patience for that.
Yeah.
Right? So those are some things that I try to implement. I track everything every day, like you're looking at applications or you're looking at policies. I'm looking at how many applications did we write? How many phone calls did you make? How many families have you contacted? How many CRMs have you sent out? How many social media posts have you made? I have all that data. My admin pulls that for me every week.
Now, do you guys control their social media pages, or do they control it? It's their own personal page, and you're tracking how they are.
Yeah,
how many
so
posts?
because they have to use our technology, which is hearsay.
Yeah.
So we track every time they post something.
Got it.
Now, they
And
can
it
have
just
an
feeds your
assistant.
system?
Yes.
Okay,
Yeah, they
that's
can have
cool.
an assistant that does it for them.
Yeah.
Each of my branches has an assistant that helps them with their CRM, right? But see, here's the thing. Technology is great, but you can't just lean on that.
Nope.
Right.
Because we're sending email blasts all the time. Sending your Happy Mother's Day is coming up.
Yeah.
Right? Your Happy Halloween, or we're doing birthdays, we're doing anniversaries. But there's nothing that replaces picking up the phone and giving a phone call. It's nothing that replaces it, man. And so people got uncomfortable with that muscle memory during the pandemic times, which is the time they should have leaned into it, because people are going to be home. And I started my career in this business cold calling, and so I never get away from that. Whenever I want to teach someone something, I pick up the phone and call one of their leads, just right in front of them.
Yeah.
Randomly. I just call them. And do I get nervous? I still get nervous. You know why? Because it's important.
Yeah.
Yeah, if you don't get nervous, then what you're doing is not important.
Yeah.
So I still get nervous about it. But yes.
You want to create an example of success.
Thank
you,
and you know that success is dependent upon your phone call and your outcome of how that phone call goes. And if you're not taking an importance of the call, or it's not important to you, then why would it ever be important to them?
I just randomly break out role plays. Every week on Wednesday morning, we do a market huddle with my entire team. It's only sales focused. It's 30 minutes. We highlight success stories, surveys that customers have sent back. We always start off with that piece of positivity. I have learned that I have to systematically make sure that I acknowledge and that I celebrate. Because if I don't, I'll fall into that bucket you're talking about, where it's always,
what are we doing? Oh, why are we messing up here?
got to
here, and
reward
here?
the behavior you want to continue.
Yeah, that's good. So, like, let's talk about that as a leader. Like, if you were to give advice, when you say systematically, what are you specifically doing? Are you building it in your calendar? Like, hey, let's celebrate small wins. Is it in your report? Hey, we need to build off of these small wins every single time that you go do a corrective action with the team? Or how are you doing that systematically for you to help you acknowledge that?
It took me a while to get a rhythm. You're never really ready for that promotion, even though you think you are, but you learn on the job, right? And I involve my team too, because if they're not involved in it and it's just my ideas, it won't get done. So every year we have planning meetings where we just sit and talk about, hey, what do we want to change? What do we want to do different? How do we want to recognize the team, right? Because they're beat up too, right? They're accustomed to closing a bunch of loans, and now they're not. Right? And so what I've been saying to them, as I mentioned to you before, celebrate the activities because they will bear fruit.
So are you bonusing them off their activity, or how are you celebrating that?
You can't do that from a compensation standpoint because of what I said earlier about
they got to draw
about Dodd-Frank, right?
Yeah.
But what we do is every week I have that Wednesday call. We recognize 2 or 3 customer surveys and the folks who did the loans for those folks. Every Monday with my leadership team, I highlight my managers just so they feel some recognition.
Yeah.
We go over the stats every Monday, and it's a 2-hour call. And I can tell you my team has been begging me, Ernest, can we please shorten the call? Can we please? No, we can't. Listen, give me this 2-hour session on Monday. Rest of the week is yours. Right? When we need to check in, when you need me on an ad hoc basis, we get together. But my manager has a call for an hour. Whatever he brings from that call, I bring to my call from 2 to 4, and whatever else happened the previous week. So I try to keep the numbers front facing so we all know where we're standing, right? And during that call, I ask each one of them, where are you going to be this week? Who are you going to be with, right? There's no need for you to be out in the market and be by yourself. Why are you not with one of your salespeople? You don't originate. I don't originate. There's no point in me going to a meeting without a salesperson with me, right? That's not business building activities, right? And so then we have clear goals for everybody. You need to have 10 sales calls per week. You need to call 10 customers per day that are in your book of business. You need to send your CRM to every birthday and anniversary customer every week. And then you need to make sure that you're out at least one event per week, networking.
And open 10 accounts per week.
What Luke said.
Absolutely. Yeah. This is sales. This is This is
my
sales.
guys don't do anything with accounts. I don't know what he's talking about, but we don't subscribe to that.
I'm talking about a little Netflix action there. If you've watched anything on some of the big banks.
You thought that went over my head. I did my studying today. I was ready.
Came prepped. But I want to bring it back to the overall theme. It's sales 101. You guys have heard this before. This is not nothing that you guys haven't heard, but it's good to get a different perspective and just different tutelage from someone that's been in sales. Forget the industry, right?
Been in sales for
I don't
20
care
plus
about
years.
the industry.
Sales is sales, man.
Sales is sales. You have the same principles and you have the same goal at the end of the day, and that's to feed yourself, feed your family, and positively impact somebody else's life. That's what sales is. That's 101. And so just to get the tutelage, the knowledge for someone that's done it for 20 plus, please soak it up, soak it in. Any questions that you have, Talbot or Luke, before we close it, we wrap it up?
It's not really a question, but kind of just feed off what you said. Probably make Luke happy too. But no, today I've been in the business for 3 years now. And, before, I know it's going to tie back, but before I started 75 Hard, I used to think I was too good to cold call anymore. You're never too good to do that. And I was looking at my income statements. I was like, how can I grow this? I want to make more, And so today, for some reason, I had a random urge to cold call some realtors. Got 4 intakes.
Oh, wow.
And I quoted one on the phone, and I was like, damn, I still got it.
Yeah.
I was nervous to do it, but it goes back to what you're saying. You can help skills. You can help somebody learn the product. You can help somebody, be better on the phone. You can't help willpower. And that's what I lacked for the longest time. And that's honestly, it's gonna go back to it again, but that's what I like 75 Hard about. It's helped my mind just do the normal stuff, And it was one of those things that I appreciate that I did that. And it's cool that you said that, because knowing that you started out doing sales, or started out cold calling, that's cool. You never outgrow that.
I started out upselling. So I had a list of customers who had credit cards, and it was my job to call that credit card customer and upsell them to a home equity loan. And then if they had a home equity loan, upsell them into a refinance. And if they had a refinance, or if they had a mortgage already, ask them about, are they getting ready to buy a new home?
Right.
And I would challenge myself, before you go to lunch, you got to make 50 calls. You can't get lunch. You had to play these mind games with yourself.
Absolutely.
When I got a team, I did this quirky thing where I would set a timer. I'd be like, hey guys, it's time to call. I set a timer for an hour. We call an hour at a time. We break. Hey, tell me about it. What'd you hear? What'd you hear on the phone call?
Right.
What'd you get back? While they were doing that, I was on the phone recruiting. That was my sales job. My sales job was recruiting. Their sales job was to get mortgages. But they heard me on the phone. I heard them on the phone. We are missing some of that. It was a joy to my heart to walk in to see you guys have the bullpen set up.
Yeah.
Yeah.
That's how I used to operate.
Right.
We don't do that any longer. We're missing that social learning aspect of that, which is why I'm saying to my managers, bring your team in once a month at least and have them make calls. Like, you got to listen to them.
For sure.
Because if they're doing all the activities, because I'll have that conversation, she's doing all the right things. Yeah, but she hasn't booked a loan in 2 months.
Right.
Have you went out with her to hear what she's
What her
saying?
pitches.
People aren't asking for the business.
Right.
Yep.
They buy
Right.
you, not the policy.
And I get it. You got some folks that are great conversationalists, great networkers, but at the end of that, there has to be this question asked. Otherwise, you can't expense this dinner. For sure. You got any deals for me? For sure. Is there somebody you know that could use my services?
For sure.
Do you know anybody that's buying a home? There really isn't cold calls that need to be made if you're calling your current customer base.
For sure.
How many times are you on the phone with a customer, you sell a deal, I know you're excited, you're happy, but before you get off the phone, did you
Ask
say
for
to
that
them,
referral.
is there anybody else in your family or friends that I can help?
Yep.
Is there anybody that would appreciate the service?
Absolutely.
When I get a survey back, right, and my team loves to highlight the surveys, and I go right in, here I am, half glass full. I'm like, that's a great survey. Let me ask you a question. Have you shared that with the realtors? Do the realtors know how the customer felt about you?
Right.
Have you called the realtor back and asked them, what are you doing?
I was putting you some. I was about
Okay,
to.
I'm watching the bottle because
No,
otherwise
no.
things can get ugly.
Hey, no, what I will say is I love
might
this
wanna-
conversation so much
Yes.
that I think we got to do 2 episodes.
Yeah.
So you better be ready for another bottle.
He's a
'cause
busy
I'm
man.
about to
I
pop
don't know
out
if he
another
can do a
bottle.
second episode. He's a
And
busy
you're gonna have to
man. He's
stay.
very
And-
busy.
And I'm going to
He's
change an outfit
very
and get more
busy.
comfortable. But I think we're going to do 2 episodes. So you better be ready for that.
Luke,
I don't think he can.
for you and Marquand, I would do that.
Yeah. Uh-huh.
See?
But it's going to take another glass for sure.
Oh, I love that. I love that. And we can talk about a lot
What
of
the
things,
hell did I get into?
Yeah.
but I'm loving the fact
Yeah.
that
Yeah. Thank you.
you have a lot of information to share, and we've been growing a podcast. You've been watching us from the beginning.
By the way, I don't want to get emotional here, man.
Yeah.
I'm
Yeah.
super proud of you two
Yeah.
and your parents and what they've created, and the fact that watching you two grow up. Hopefully,
Yeah.
you guys aren't embarrassed about this, right?
No, you're.
Coaching you guys on the football field.
Oh,
these
yeah.
little 7, 8-year-old, 10-year-old kids.
I'm not embarrassed at all, man.
to
I loved
see,
it.
to see you guys doing what you're doing now, and obviously I get on Marq about following in my footsteps in
Yeah.
some form or fashion, but we talk shop sometimes now,
Yeah.
and it's kind of cool, man.
Yeah.
He used to see me host my team at the house for Christmas parties, and I know he at the time they would be like, "Dad, why are your work people at the house?" Like,
Yeah.
like, hey man, listen, these people help me take care of you.
Yeah.
Right? They're
Oh,
like
yeah.
my extended family. And
Yeah.
so you guys are the epitome of that.
Yeah.
Right? To think about how you met by chance. I remember meeting your dad for the first time and him saying, bring the boys out. Because I didn't know what to do with
Yeah.
all these kids at 24 years old.
Yeah.
So just wanted to say I'm happy.
Maybe
and
we
I'm
can
proud for you
maybe
guys.
maybe
We're
we
gonna
can
talk
share
about
that
that's the
story on
next
the next
episode.
episode.
Yeah, that's
maybe
the
we can
next
get into a little
episode.
bit of
We
that.
could
That'll
dive
be
into
kind of
that.
exciting, and we'll switch it up a little bit.
Yeah. Talks
but
on the
one,
rocks.
Thanks. We'll do a little talks on the rocks.
Yeah, it's
That'll
been
be
a
the
minute.
next
Yeah, yeah, yeah,
episode.
yeah.
That'll be the next episode.
So, Marq, you want to close this out, and then we'll change up a little bit, do another episode so that we can have 2 weeks with Ernest. That'd be fun.
Absolutely. I think that this, again, guys, this is a lot of knowledge that we've just gained in regards to a lot, not only the mortgage industry, but again, one-on-one sales. And again, for someone that's been in the industry, it's not just industry, but sales, 20 plus years.
Yeah.
You don't get that in front of you every
That's
single
wisdom.
day. It's
I
a
call
lot
that
of wisdom.
wisdom.
Exactly. You don't get that every single day. And so we're blessed. And we hope that you guys have picked up something that you can take and run with. And if you guys have any questions or anything that you want to ask, or, hey, Ernest said this, but I don't get this part.
Or
just
hey,
shoot it
Ernest
to
has
me.
got somebody on his team who can help me with a loan.
Yeah. There you go. There you go. I like that. I like
Ding,
that.
ding, ding, ding.
The second one.
Or if you got people that need health insurance.
Yes. And so that's what we're here for, and that's what we try to bring to the Whiskey and Insurance podcast. So please let us know. And this has been a wonderful episode. And I guess, hey,
We're doing another.
we're doing
running
another
one on here.
Yes.
So let's-
Episode Trey Quattro.
All right, let's
we'll
do
close
one
this
more
out, baby.
toast.
One more toast. Yeah.
Cheers.
Yes.
Ernest.
Cheers to
Cheers
Apollo.
whiskey.
Yeah.
Insurance,
Come on,
baby.
whiskey
Cheers to
for the
Apollo.
soul,
Insurance for the
wallet.
wallets.
Until 10
Next
minutes from
time.
now.
Yeah.